Hey folks, welcome to Tuesday, the 14th of December 2021. And quite a nice bit of, both buying and selling yesterday. Just selling yesterday on equities. I was looking at the SPOOS chart there and saw the kind of hump up from Friday and then down from yesterday. So really just a lot of selling on equities driving down, especially on the Dow. Quite a move, quite a fluid move down to some pretty decent targets that we had lined up and we'd identified in real time in the room. So yeah, look, Omicron, while it is not as infectious, I think the market's got to price in some risk there, and we're coming into the Fed tomorrow evening with Jerome. A lot of central banks this week coming out with policy and rate decisions. So I think the market's just not really inclined to now cruise on to new all-time highs, albeit it was looking very probable coming into the early session on Monday. But as I said, it just felt like we had such a big up week last week that we needed to retrace, and I think that still sits in this morning as well. We look over on the charts, the Dow. I'll show you here what we were looking at on the day. Well, this is a weekly chart, right? So I can delete down some stuff here and make this a little bit easier to read. But you can see the well, first of all, I'll make these all the same color just to make that a little bit easier as well. All right, so Fibonacci, right? Big. These are weekly bars. Big swing from the low 33,843s on the Dow to the high that we had of last week here. Now, coming into the session, pre-US, we did have a high put in the European session, so 36,022s, and I updated this swing on the Fibonacci. Lo and behold, our first stop in a retracement is 23.6. That's 35,509s on the Dow. And sure enough, what was the low of day on the Dow yesterday? Well, it was our 35,509s, that 23.6 retracement level. So shorting this down was the trade. A few of us were on yesterday. Really nice, lovely opportunity. Not very easy to get on if you were waiting for a nice pattern on the open. It wasn't really there. The momentum just simply, we opened, we fiddled around for about 5-10 minutes, trying to hold a bid on VWAP, and then bang, we just crashed back down into some significant areas here you can see. And so really, putting on 10 ticks of risk yesterday. Here's 21 ticks, that's fine. And running that down to target, I mean, that's a 14.62 to 1. That's about $1,500 per single contract traded here. Really nice trade to be on there yesterday. So, and then again, I actually looked to get in on the turn yesterday, albeit a bit too early. Job done as well. So just absolutely let that go and was not really interested to find out that I missed on that turn back up out of the lows of yesterday. And of course, the Fibonacci can be used here for the turns, but really that's a much faster trade you're on. So yeah, look, really nice stuff yesterday in the Dow for us. I think uh, speaking further on this for today, I think while we have achieved the 23.6, I actually think we could move lower today, certainly to test 35,350s. And looking at that on the daily chart or the weekly bar here, you can see that's the high. Actually, just tighten that up a bit. That's the high. At 35,340s is the high of the week of the 16th of August this year. Um, you know, I mean, currently the market's not exactly, well, judging from the DAX this morning, equities are just a little bit weak. The DAX especially attempted to kind of get imbalanced up there early on and just got smacked down. So playing this on the short side, I think, is the name of the game today. And of course, do you want to even get involved with coming into the Fed session tomorrow evening, which we'll be covering from 6:45 p.m. in a live Zoom for the Pro Trader team here at Duggan Capital. SPOOs as well. Looking at the SPOOs on the daily. I'm not putting on the retracements here. I can do from the swing low to the swing high. That puts our 38.2 retracement level down here at the S1 pretty much. I think, look, if we can achieve this before the US session opens, I think you may have a situation where you'll get actually a bounce in the in the US session. But one thing to be aware of if you are looking for the longs, and you have to be, is that you have to be contextually aware, and you have to be aware of this range that we've sat in since last Tuesday. So we've been sitting up here for a week. We tried to break out here on Friday, couldn't do it. Came back in down yesterday, pre the open, on the open, all the way back down to test the bottom of this range. Job done. Now I think with the failure of us on the breakout and the upside, I think we could have success on the breakdown to the downside. And we're certainly seeing that now playing out on the market. So where is it going to run to? S1, find support. Yeah, I mean, potentially, I'd like to wait and see, where we are probably an hour after the open. I could imagine us trading into the 50 EMA, or certainly the 50% retracement, 4604s. But really, who knows where the support is going to come into this market? Certainly not between here and S1. So just be aware of that if you're trying to just buy on these dips now in equities. DAX. Let's go over to the Nasdaq. Here on the daily and on the 60-minute. There you go. So on the weekly bars, for example, we're about to trade back into the 16,000, big psychological handle on the Nasdaq. It's also confident with the 50% retracement. Now, I don't want to get too obsessed with the retracement talk here and the Fibonacci talk. So, here we go. I think, look, 50 EMA just below on the daily. Here we are on the 60-minute in the mid left of your screen. So that's sitting at 15,882s for the exponential moving average 50 period. I think it'll be interesting to see if we get buyers in 16,000. If I blow up this 60-minute, here you go. More snaps to the downside in oil as well. So yeah, look, I don't think we didn't have much of it to do with the 16,000 back here when we were trading it last Tuesday at early doors. Really good gains being put on back there. So, is it going to come in as support? Look, I'd wait to see if this market starts to show you some support in and around this 16,000, maybe even have a flush out to the 50s as it did over here, right? But you basically want to see the inverse of what happened over here just above my head. You want to see the market actually kind of holding on this level at some point if you are looking for the longs. If you're looking for the shorts, well, I wouldn't advise chasing this market down right now. We're negative 0.47% on the Nasdaq. I think 100% there is support to be had at 15,701s. If we should get down there, I think that'd be way too cheap, way too quickly. So really, I'm just trading what is happening. I don't take Nasdaq trades or any US equity trades pre-market. I would use the DAX for taking advantage of opportunities in the equity space early morning. So just keep an eye on that 16,000 level basically in the Nasdaq. Oil, and it's just broken right now as I'm speaking. Euro up, dollar down. New lows across the equity space here. Holding shorts on the Nasdaq. On the DAX, just about to take some tears now. So oil, things are kind of moving right now. Just having a glance at the headlines because I do mute my Squak for this. I don't think anything's across here, guys, is it? Tesla pre-market down 2.6%. Musk selling off his shares, of course. More shares, not all shares. Pro traders, is there anything that's come across, like Lucas, anything come over there on the headlines? Oil here, just coming back to this trend. So this trend is on the daily bars, 2nd of November last year, and the low of the 23rd of August this year. This gives us this uptrend, which has been pretty decent. The Squawk is talking to me now. Not too much. He's referencing a real world study on the Omicron variant, but nothing new there coming across. So this is our trend on oil. We're holding extremely well at this level. But something I was asking the Squawk about is if we have now these first incidences of Omicron in China, what I'm interested to know above anything else is what are they going to think about their oil demand forecast for the next quarter at the least. We were in this situation in 2020 February. They had that breakout in Wuhan, and I think within 12 hours they cut their global demand forecast their national demand oil forecast by 30, I think it was 32% at the time, and that did have immediate impact on the price of oil. So you got to be aware of that. You got to be aware of, IEA report came out this morning. They're looking at, actually, because of the OPEC cuts, we're going to be back to a surplus of 1 million barrels a day by Q1 2022. And that's what may weigh on this market, given we're trading in futures. We're trading the F22 contract, which is January, February, March, constituting quarter one for next year. So it's a bit of a mixed bag for oil for me at the moment. I mean, I don't see any simple layup trades on the horizon, but certainly a bit of weakness now showing its face in the oil book. Really, it's got to hold this whole S1 period or area here for us to get on up. I am the perma bull in oil, so don't ask me about selling it. Every pullback, it could be $10 deep, could be $20 deep. I'll just tell you, it's a fantastic opportunity to get some value. Yeah, that's it really for me. Gold, I'm not interested really in gold at the moment. 1782s is the line in the sand. It's holding that very well yesterday and today, this morning. That sort of leads me to believe that, well, at some point it's just going to smash and break down. So you're seeing the Dixie now as well coming off on the bottom right of your screen, letting that euro get on up here. And so I'm not, yeah, actually I could probably be convinced into looking, we could have a multi-week swing long in oil, or sorry, in euro coming up. But it's compressing, as you can see, quite heavily here on the top left of your screen. It's just kind of this sideways compression happening, and really need to sort of break out of this area here, this trend. We have this channel here below, but this trend is going to cap trade for now and break out highly likely, given that we have a corresponding inverse breakdown on the Dixie. All right, that's it. Have a good session. Please do click the subscribe in YouTube if you haven't, and we've got some amazing stuff happening in this Discord almost every day, and a couple of new subscribers, and really good to see people getting involved. So listen, have a good session, and if I don't see you, I will see you for tomorrow evening's session for the FOMC and Jerome Powell. All right, inflation, remember, it's not transitory. Bye-bye.